How's your first bear market?
It's great. It's it's honestly, it's great. I've learned to actually love it. It's I don't know, the chaos, and I mean, everybody loves the bull market, the up only, we're gonna make it, all that. But I don't know, the bear, something with like filtering out all of the noise, all of the speculation, all of the, the NFTs and all the garbage, and then being like, yeah, I'm still here. I'm here for the reason I was here 1 year ago, 2 years ago, 3 years ago, 4 years ago. I mean, I'm here for the reason that I was in high school, like pitching my friends at parties about this orange coin thing. Like that's the same reason I'm talking to you today. So it's been great.
So you got more conviction now.
Yeah, I have more conviction than ever. And like, the exchange rate's just a thing, right? And it's kind of satisfying seeing, like, because I remember when Bitcoin traded to 17,000 in 2020, and like everybody was euphoric, and the chart was like looked great, and it was on CNBC every single day in the news cycle. And now Bitcoin's 17,000 whatever today, and it's dead, and the thesis is broken, and all of these things. And it's just kind of funny how human psychology works.
When we made the show with Harry before this, we looked up. So I launched a podcast, I think it was November 23rd, 2017. The price on December 17th, so about just less than a month after I launched the podcast, was what?
20,000.
20,000 pretty much, yeah.
That was the top.
And then here we are 5 years later.
What Bitcoin did go sideways.
Yeah, we realized it's been a stable coin through the whole time. Do you think we bottomed?
I think the worst of the price-based capitulation is done. I think we have a painful sideways existence for some time. I don't know exactly, but for the most part, the exciting part of the bear market in terms of the volatility, the deleveraging, whatever it may be. I mean, there's potentially another catalyst or two, like Bitcoin crypto native wise, but like for the most part, we've just washed the dead bodies to the shore. And now it's like Pete Rizzo, and I've told this story a few times. He had the funniest analogy ever. I think we were on a call or we were somewhere, we were just hanging out, and he's like, this is what you don't understand. He's like, here's the analogy where you're in an alley, and you're in a dark alley and no one can see you, and two guys come and they jump you, and they're just kicking the shit out of you and beating you up, and you're just fight or flight mode, just trying to protect yourself, trying not to die. And these guys rob you to take your money, and they're just stomping you on the ground. And once it's over, and once the guy's left and they leave you in the alley, which is the last 12 months, you got another 2 to 3 to 4 hours of just huddled. Your body's in shock. You don't know what's going on until you realize that no one's coming to get you. And you got to crawl and pick yourself up and get out of the alley and get some help and recover. And so I think we still got to crawl out of the alley here. But that's fine because, we didn't die. So
yeah, and they might be just about to come back in the alley and just punch us a couple more times.
A couple more gut punches maybe, but we'll see.
We didn't get that fucker enough. Do you remember when Rizzo and he's like, were you there? He might have just been Jeremy when he said he's a cycle maximalist.
Yeah, no, I was there, yeah.
Yeah, because I was like, no, Rizzo, this time it's different. This time it's different, Rizzo. We're going to have a super cycle. It's not going to come down as much. He's like, I'm a cycle maximalist. It's going to be the same shit over and over.
Yeah, he was pretty right too. He was like, it was sometime in 2021. He's like, listen, man, like this is what's going to happen, and I don't need any data. I don't care about inflation or anything else. He's like, in 12 months' time, we're going to be 70% lower. And I don't know the exact time frame, but everybody thinks this time's different, and it's a super cycle. And he used to like work with Dan Held and all that. And he's like, and the super cycle thesis is hilarious because everybody's going to lever up and everybody's going to get absolutely wrecked. And then it's going to go down 70%. And we're going to do the whole same thing over again. And Rizzo was right. So I got to hand it to him.
Yeah, props Rizzo. Rizzo was right. But it's going to be different this time.
Yeah, the next one is a super cycle.
The next one is a super cycle. We're going to get out of it. So you've kind of become, it's interesting, you've become like a leading analyst. Really interesting following your Twitter over the last year. Brilliant. Congratulations.
Thank you.
I don't know how you do it. You seem to be fast on everything that's happening. You've got really good intuition. It's been a real pleasure to kind of watch what you've done. But over this year, did you have suspicions of what was coming? Did you see much of what was coming? I'm really talking about this kind of leverage contagion that's happened.
Yeah, no, I mean, I will say, like in 2021, the double bubble kind of threw a wrench through like some of the analysis, or some of the, like, I was surprised that we broke a new all-time high in the fall, and from there, and the Fed was still printing, and I wasn't, didn't signal the top. I didn't nail that there, but when we were around 40,000, maybe 35,000, whatever, I was actually in Europe on a boarding. I was in Prague going to Madrid as this whole Luna UST thing was popping off. And I hadn't really dug too much into Luna. I didn't really care. I'm not buying, the newest Ponzi on the crypto block. I don't. But I just started to examine the mechanics of it, just to understand, because there's a lot of Bitcoin buying. I mean, they bought 80,000 Bitcoin or whatever it was. And I started digging into mechanics, and I see as I'm in this airport, I see the UST peg break, and there's like $20 billion of stable coins in this, synthetic algo stable or whatever. And I see that peg start to go to the 98 cent bound or whatever it may be. And that was like the point where once I reached 98 cents, they start to liquidate the Bitcoin. And so, I started to see like the crypto market start to tank. And I was like, well, hey guys, like first off, get out of UST. And second off, just based on, I started to look into the mechanics, like in real time. I'm on crappy Wi-Fi on my phone in this airport. I was like, I think Luna is like probably programmatically going to zero. They're just hyperinflating the supply of it. And I talked to a couple of buddies after the fact, Luna unwound to zero, but Bitcoin is still like 30K, right? Like I think it wicked to 25,000 or something and recovered a bit. And I talked to some buddies and some friends of friends. And I was like, oh, wow, wait, I just kind of realized like there was tens of, $10-20 billion of stable coin promises that just evaporated. And just like, I hadn't lived through a financial crisis, but had read about a bunch of history and Great Financial Crisis and other historical case studies. And it was like, this seems like a contagion event. So that was like, I've always had a distrust for yield products. But that was kind of the first time that I said, okay, I think there's like, if you look at the yield products in crypto, right, and how they generated the yield, it was futures arbitrage, GBTC arbitrage, and then both of those disappeared in the earliest phases of the bull market. The last one that everyone kind of ponied onto was UST. So when that blew up, it was like, okay, there's some big time contagion. And so, Celsius, go down the list, right? I think was able to spot a lot of those and really kind of like turned pretty bearish on Bitcoin crypto, like not on a long-term thesis, but just near-term, medium-term, just given the fact that there's no lender of last resort in this ecosystem, and the fact that there's all this bad debt out there, and the counterparty risk just kind of ravaged the whole thing. So, yeah, I mean, I didn't know that FTX was going to implode in June, but obviously the signs were there.
I don't think many people spotted that. No, I think they did a good job of kind of gaslighting everyone. I remember we were in Miami and we're driving around and we saw the massive Tom Brady or Giselle adverts, and they were doing their TV spots. It felt like every crypto trader on Twitter, the ones I do follow, they're all using FTX. I just assumed they were the next Binance. They just managed to somehow build a massive customer base, and you had some unique products that were doing all right. I had no idea what was going on in the background. And I know a couple of people had spotted it, but I think they caught everyone off guard.
Yeah. Funny enough, like I was, over the summer and none of like the outward facing like influencers or whatever. But it was like literally like some anon crypto, like literally like a camel and like a couple other like a cat and a few other like anonymous crypto guys that I interact with were just constantly shit posting about how SBF was a fraud and about how FTX was like a domino and all this thing. And I was like, I just kept it in the back of my mind because these guys are like very, very smart traders. They're just fantastic traders. They're not degens. They're actually very objective, bull and bear. And so I I was DMing one of them and I was like, hey, like, why does Sam, because the Voyager came out and they went bankrupt, and Voyager said they released their loan book, and they were like, oh yeah, one of our creditors, or one of our creditors or debtors, I'm sorry, Alameda Research owes us $370 million. And I DM this guy and I go, why does Sam have his hand in every bucket shop in this space? And he goes, you're starting to realize, huh? And he sent me a document, a screenshot of a document, and it was from 2019, and it was the Alameda Research pitch deck. And it was 15% fixed rate loans. We have one investment product, and it was slides, and it showed their performance, and it was just up only with no volatility. And if maybe Danny, if you want to show this, or if you look at like what Madoff, the like Madoffs.
I was about to say that. I was just about to say the last 2 nights we've been watching the new Netflix series about Madoff. Well, I say that. I mean, I fell asleep, but Danny's been watching it. Has it been any good?
It's pretty good so far, yeah.
Yeah, I've watched about the first 5 minutes.
But if you look at Madoff's like return, like his returns over the years, it was up only with like no downside volatility. So he outperformed the S&P every time, but he did it with no volatility to the downside. And I took that deck and I sent it around a couple times, and I said, no idea if this is real, but I suspect it's fake, because if they actually did this, because it was an Alameda pitch deck from the 2018-19 bear market, and it shows the price of Bitcoin and ETH just tanking and it went down. Bitcoin went down 80% on a ton of volatility. There's huge bear market rallies and all this, as you probably remember. Mm-hmm. And Alameda's performance was up only. And I sent it around to a couple buddies, and I was like, no idea if this is real. And I didn't want to post it to Twitter because these guys were like the titans of, the bear market. Like they were bailing everybody out, and I wasn't willing to stake my reputation on some like anon tip. But I said, if this is true, these guys are running a Ponzi. And fast forward 2 months, I'm pretty bearish on almost all crypto coins or whatever. But fast forward 2 months, and the CoinDesk Alameda balance sheet gets leaked, and it was like, oh, these guys, Alameda Research, the Titan hedge fund of the crypto industry, has 14 billion of assets against 8 billion in liabilities, and the assets are their own exchange token, like $7 or $8 billion of it, and a bunch of other Solana ecosystem coins with no liquidity. None of these things have liquidity, but especially FTT, it's their own exchange token, which they're the primary market maker of, and they're collateralized against it, collateralized loans. And so at that point, I was certain that FTX was, or at least Alameda was functionally insolvent. The question was whether FTX and Alameda had a relationship, which we all know how that ended. But I mean, the sad thing is like this whole thing convolutes like Bitcoin, right? Like FTX collapses because someone's running a fraudulent scam, and all of a sudden, your friend is like, "Hey, dude, what's happening with Bitcoin?" And it's this realization that, and I think that there was obviously people knew that there was leverage and speculation and whatever, but that the golden the freedom money enabled, or has enabled somewhat of like a golden age of fraud, right, in the form of blockchains and tokens and the whole ecosystem, right?
Yeah. Do you think if there'd been no Alameda, just FTX had just been its own entity, do you think it would have survived, or do you think it was just?
Well, here's the interesting thing is that, and Danny, you might be able to pull this up, is in 2019, Su Zhu, former head or co-founder of Three Arrows Capital that went bust in the whole Luna Ponzi. And these guys were like also like one of the best performers, like titans of the industry during the bull market, alleged billionaires, et cetera. They published, Su Zhu published those 2 slides I'm referring to of the Alameda pitch deck. And he published them with like a thinking emoji or like a suspicious emoji. And then quote retweeted that a couple months later. And he goes, "Oh, these are the guys that are spinning up a BitMEX competitor with a new ICO, like basically because they ran out of money." If you look up maybe like Su Zhu BitMEX, you'll find that quote tweet. But it was like basically whatever Ponzi they were running to get those Bernie Madoff style returns Well, they ran out of greater fools. So what did they do? They launched FTT from nothing. They spun it up from nothing, and they launched FTX. And then from there, they 2020 and the whole DeFi explosion, they basically copy and pasted Solana. There it is, right? So these guys are now trying to launch a BitMEX competitor and and do an ICO for it. And the ICO is FTT. So these guys were commingling, maybe not commingling funds, but the FTX product.
No downside in bold.
Yeah.
Yeah. So this is the packages. We offer one investment product, 15% annualized fixed rate loans, no lockup. We can accept both fiat and crypto and can pay interest non-denominated in either. We can take on another 200 million in capital and achieve returns that beat traditional crypto markets. For investors with specific risk profiles, we're happy to discuss custom packages. For investments of 50 million or more, we are willing to discuss higher rates of return. These loans have no downside.
No downside.
That is
no downside in bold.
Yeah, no downside in bold. We guarantee full payment, the principal and interest, enforceable under US law and established by all parties' legal counsel. I mean, how is that enforceable? Because clearly it isn't.
It's a lie.
Okay, we're extremely confident we'll pay this full amount. In the unlikely case where we lose more than 2% over a month, we will give all investors the opportunity to recall their funds, and we still guarantee full repayment. I mean, can you imagine the conversation? They said, let's put this shit together.
Yeah. No. So I saw this in the summer and immediately was like, no, that's like a hit job, a reputational hit job. Like I'll post anything and everything. Like I've made a lot of friends, Peter, in the crypto industry. I've made a certain amount of enemies just off of my willingness to, sorry, I kicked a wire, off my willingness to just like call BS on things, whether it's, crypto scams or like, calling out like Celsius and Alex Mashinsky or whatever. It's like, I don't really necessarily care about what people think. Like I'll stand up for what's right, but I didn't post anything about it because I was like, well, this is obviously fake. I mean, come on. Like I didn't see that Suzu tweet. Cause like it was so obviously a Ponzi, like no risk, no downside, all that. Like these things don't exist in capital markets. It's not a thing. And so the fact that they were able to do this, raise potentially like at least tens of millions, maybe hundreds of millions of dollars. And then once they ran out of money, launch an ICO, launch an exchange, and continue the scam for 3 more years. I think that says something about the crypto ecosystem in general. And maybe that's over. Maybe that era is done. Like the scamming ICO, perpetual motion machine, hot ball of money. But maybe it's not, and like that's the whole thing with like Bitcoin being cross collateralized with all this garbage. That's like the one thing where, I think it would be best if we could leave it behind. Unfortunately, Bitcoin is freedom money and it, people can use it how they wish. So